Good morning. My name is Scott Redler, Chief Strategic Officer, T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So red arrows around the world this morning as after a very potent day in U.S. markets. And the correction did start before all this talk about Syria, but now as that situation intensifies, it seems like the correction is as well.
Yes, the correction actually started probably a month ago at that Head and Shoulders top, more based on taper talk, more based on whether or not the earnings were able to hold up the valuation of the S&P. But, you know, with this whole Syria complication, you know, it does raise some fears when you see a country like Russia come out and say there could be catastrophic consequences if the U.S. and its allies, you know, do some military action. So I think that's adding some fuel to what has been this corrective process, you know, but we are almost 5% off the highest, so, you know, it's starting to get a little, you know, it could be long in the tooth there.
Right. Well, there were clues that we were weakening, and if you saw that there were some signs to take some risk off, what would be some clues that we could look to put some risk potentially back on?
Well, I think that's what we're looking to do. You know, I think my community's a little spoiled because they were happy to have the risk off. A, they were happy for that, but B, they were a little upset they didn't make enough money short, and now everyone's like, how do we get back in? So you really want to be patient, and you really want to make sure that you get that tactical buy signal, you know, and then see if it gets supported. And if you look at the chart of, you know, the S&P, you will see here's that Head and Shoulders top that formed. Remember 1698, we talked about it many times. That broke. Then it resolved to the downside through 1684. You know, and then you had that little tradable bounce up to almost 1670 before that outside day, which took place, you know, on Monday. So, you know, you had to be quick and almost surgical to get that out of the way. So some guys got risk down here or went short, and if you did so, you were not upset about this two-day move. So, well, anyway, you know, now what you want to do is you want to write down what today's pivot is, which is yesterday's low, which is 1629. The best setup would be today is if we trade below 1629, get some fear, accelerate lower, and then come back up. And then maybe we get some kind of pivot into this trend line. There is a cluster of support that comes in. I know it's pretty wide, but you know, you have 1626, which is the start of some, okay, which really only goes all the way down to 1606. So this is a big area. So, you know, I'm pretty much risk down. I'd love to see a move into here and some kind of signal, you know, for a tactical long. And then we have to figure out whether or not, you know, it'll be worthy to stay with, because we are, you know, on this more intermediate trend after breaking this accelerated trend, which was only done once before.
Well, two of the groups that had given us signs that we were weakening were the financials and the home builders. What are the next spots to watch there?
Well, the home builders are getting to a spot where they have a big macro Head and Shoulders top, which takes a lot of force to break. They've been weakening, and that's been a sign that have helped us take some risk off. You look real quickly at the chart, you know, here's the left shoulder, here's the head, here's the right shoulder. It's already right at the 200-day or even below it a litlittle bit. Watch this 2850-ish. If it were to break below that and accelerate it below, I think it's going to be hard to find a bounce in the overall markets. And if you look at the XLF, which also gave you, you know, an exit strategy right around here, you know, it already broke this intermediate or trend, not the macro, but intermediate since November, with a big slice below the 100-day. So the pivot here on the financials is 1941. If it just continues lower, you know, there's a lot of space between that spot and the 200-day and the June lows. So, you know, you have to be very careful here and not jump the gun too early.
Meanwhile, strong stocks that have been on our watch list are breaking upper levels. Would you say the composure has changed for stocks like Facebook and Apple?
I won't say change, but you know, they're not as pent up. You know, you want to watch the speed of situations, and if you look real quickly at Apple, so to speak, you will see really nice moves since that earnings gap up. You know, it was fast and furious. Then you had this upper flag that Monday gave you a signal to sell, and then yesterday some stops got triggered at 498. If you did get out of the way and you're looking for tactical trades, you have the 21-day around 41-ish. And then you have this prior breakout right here. So write down these two spots, and then also know yesterday's low of 486 is your tactical spot. So if we go lower, trade back above it, maybe, you know, that's that buyable spot. We saw that on Facebook before the breakout. Remember right here when Facebook was all pent up and then broke this high-level flag to find support, and then it continued. You know, I did sell some into this area. I'm going to be looking to see if I could buy Facebook back somewhere between like 38.80 and 39.30. You know, I think that this pullback is an opportunity there too.
And meanwhile, Tesla has been strong and did not have a breakdown yesterday.
No, this stock held 160 and a quarter, and as long as it stays above 160 and a quarter, I still think that trend is real strong.
And we're seeing people go into safety with the TLTs, which rose yesterday.
Yeah, well, at this point, I think that's a counter trend trade, which could be lucky for people to get into the TBTs or reshort the TLTs. You look here at this chart, you'll see you did have a snapback, and it's almost back at this 107-ish. If you played it from the long side for a counter trend move above this pivot of 103, I think you trim some. And maybe even if you're looking to be extra cute, you could use this area to short. But if you played this for the bounce, this 107, 108, I think it's going to be hard to get through.
And meanwhile, gold, another up day there, but be careful there because that move potentially could be over soon.
Yeah, I think the majority of that move's over. Okay, we talked about the blood in the street lows on June 28th. You look at the chart real quickly here, you'll see this was a time to buy gold. This was another time to buy gold. Then this was your follow through, and now look at it. I guess it can churn higher here, but for me, my recommendation is not to chase it from this 137 up to 143. I think you missed the meat of the move.
And we'll talk about all this and more in the full morning call, so stay with us.